Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny. This is another video series in the How Did Stupidity Work Out? And today I am covering a company that I'm sure a lot of you have heard of, Wework. And this company, unlike the other companies that I talked about before, is not public. It actually never made it to being public. They worked on the IPO in 2019, but it never made it there for various different reasons. But it doesn't mean that there's no stupidity there. It was actually privately valued at $47 billion based on SoftBank's $2 billion investment into it when, I think it was like January 2019, SoftBank put $2 billion into it, valuing the company at $47 billion. But I have no doubt that if WeWork became publicly traded, that I have no doubt that investors were going to send the market cap to over 100 billion on something like this, because I really think that as investors we are getting dumber and dumber, or stupider and stupider, and just look at perfect examples is just look at Tesla and Bitcoin. If people are willing to pay for $40,000 for Bitcoin, which is essentially worthless, then there's just no hope. We are just so fucked up that I just don't even have words for it. But I actually applaud founder of WeWork, this guy here, because he obviously figured out a way. At the end of the day, he actually walked away from this because he was fired. He walked away from this walking away with like $1.7 billion. So I actually applaud him because he figured out how to use people's stupidity and make a lot of money out of nothing, just by promising a bunch of things and selling people the Kool-Aid. He, along with investment bankers, used absolutely the right words to excite people. So what I want to do right now is actually go over the IPO documents, and I'll show you the right words that they use to get people ridiculously excited about this company.
Did you want to invest more in WeWork?
Of course, of course.
Were you disappointed you were not able to, or that some of your investors, this has been reported, tried or succeeded perhaps in saying don't invest as much as you want?
Well, I still want to invest more and I want to increase. Some of my investors said, Masa, you get too excited and too much concentration into one company. Don't go too far, too much. But I still, I'm so excited, and if I could increase, I would like to increase.
So here's the IPO documents for the We company. And so if you don't know what Wework is they are saying that they are revolutionizing the real estate industry. And what they're doing is they are providing office space. And just think about it before the pandemic. They are providing office space for freelancers, startups, small companies, or any companies that don't want to have their own leases on office space. WeWork signs a big lease with the landlord or the owner of the property, and then they sublease it on to smaller companies. So let's say if you're a freelancer or a small startup and you don't really know where your business is going, but you don't want to work from home. So again, think pre-COVID, then it actually might make sense for you to sign a membership agreement with someone like WeWork to get access to office space at a cheaper rate, but you share the office with other businesses. But like this, you don't have to do the build out. You don't have to sign a 5 or 10-year lease, you just, I don't know, either pay by the minute or pay monthly or even yearly. I mean, they have flexible schedules, but pretty much the business is they lease the office space from the owner, and then they sublease it to many different individuals. So that's really the basic thing about this business. And let's go back to analyzing and reading through some of the things for the We company. Okay, so we are a community-based company committed to maximum global impact. Our mission is to elevate the world's consciousness. We have built a worldwide platform that supports growth, shares experiences, and true success. We provide our members with flexible access to beautiful spaces, a culture of inclusivity, and the energy of an inspired community, all connected by an extensive technology infrastructure. We believe our company has the power to elevate how people work, live, and grow. The company started in 2010. We opened our first member community at 154 Grand Street in New York. In the beginning, our members consisted mostly of freelancers, startups, and small businesses. Over the past 9 years, we have rapidly scaled our business while honoring our mission. So these are the locations that they have. So it started in 2010 with 2 locations, and as you can see, they expanded the locations tremendously, from 1 city to 100 cities, and the membership went from 450 to more than 500,000 members. Okay, this one is a good one. They are saying we pioneered a space as a service business model. Space as a service, okay? So that's a good one, because you know what's hot in the investment community: software as a service, right? So they use space as a service to get the same idiots think that this is something new, okay? There's nothing new about this business model, okay? And I know from my own experience, because here's this company, AWG, okay? Regis. This is a company out of Belgium, okay? And I used Regis myself when I started Classic Value Investors, and I actually at the beginning thought that I needed to have an address office, right? So I went to Regis and paid them a monthly fee to get their address, but I didn't even use the offices. I just used Regis to have my mail delivered there. And it was like, I think, I don't know, 30 or 50 bucks a month or something like this. And other small business, they use Regis, and they can get like their own office, okay? So Regis, what it does, it leases the entire floor or entire space in a good looking office building, and then it subleases the space to small business owners like myself and others, obviously at a higher price per square foot than what they're paying. But the idea is that they can get enough people sign up as clients that it exceeds their cost of the lease. But to say in these documents that Wework pioneered space as a service membership model, that's a complete lie. And the only people that will believe this is people that don't know anything about business and didn't do any of their work.
But his initial decision to invest in Wework took approximately 28 minutes, including when he got in, left, and drove in the car.
Maybe he should have taken a little bit more time to study the business. Maybe he would have realized that this is not a great business model. Okay, this sentence here is kind of interesting. We employ over 500 designers and architects who work relentlessly to create spaces that are beautiful but simple, elevated but approachable, global yet locally unique, all delivered at a high quality without the associated expense. So now, if you look at it from the point of view of a business, right? Let's say you want to start something like this. You go and you sign a lease with an office landlord or office owner, and you want to, sublease it to a bunch of small businesses in your town. Okay, so first thing what you're going to do is you're going to sign a long-term 15-year lease. Okay, then you have to sign it in a beautiful location, which means high rent. Okay, and you're going to sign it for many, many years. And now, in order to attract customers or clients to such a location, what they do is they hire 500 designers and architects to make the space beautiful. What this means is money, money, money. Okay, office build out, beautiful furniture, beautiful floor, that all costs money. That doesn't sound like a great business to me, to be spending this kind of money on stuff like that. Now they're using this space as a service offering again, because what they're trying to do is they're trying to take a very boring business and they're trying to label themselves as a technology company. Doesn't this sound kind of similar to another company in the car manufacturing space that is making just cars and is calling itself a technology company? Same thing here. It's a real estate company calling itself a technology company, space as a service. Beautiful. This is music to the technology bugs that just want to buy stocks that say anything technology in them. Okay, so here they are talking about how we have grown significantly since our inception. Our membership base has grown by over 100% every year since 2014. It took us more than 7 years to achieve 1 billion run rate revenue, but only one additional year to reach 2 billion run rate revenue, and just 6 months to reach 3 billion run rate revenue. Okay, so they're saying that they're making $3 billion of revenue, and the company is worth $47 billion. I didn't even show you how much money they're losing. The more locations we strategically cluster in a given city, the larger and more dynamic community it becomes. So they're trying to say here that, as if this was some kind of network effect, that the more locations they have, the bigger the community. It's just a bunch of BS. When you go to how many companies, when it comes to small companies from a local city, care about whether, let's say you're a small business in Chicago, how much do you care if they have an office in Singapore? I mean, that's just a selling tactic. This business, they're talking about economies of scale. This business, it has some economies of scale, but locally. So in other words, when you sign a lease for an office in, let's say, the city of Chicago, and there's some you have huge fixed costs at the beginning, and you lose money until you sign up enough people, and then after a certain level of occupancy, everything else goes straight to the bottom line. But there's a limit as to how many people you can sign up. So then, to grow revenue, you have to go into another city to sign another lease, and then to do another build out, which is capital intensive. And all you're doing is, when you're signing 15-year leases, and then you sublease it to clients for on a monthly basis or a yearly basis, you lock yourself up for huge fixed payments, and your clients are on short-term payments. So what happens during recessions? Those clients, freelancers, small businesses, startups, are the first ones that are going to go out of business, are the first ones that are going to go, you know what, we can't afford office space, we're just going to work from home. And so they have the flexibility to cancel you, and WeWork doesn't have any flexibility because they signed up 15-year leases. Here they're talking about the opportunity. We are reinventing the way people work and transforming the way individuals and organizations relate to the workplace. First of all, they're not reinventing anything because Regis is already doing this. Second of all, they're not transforming anything, but the word transforming is music to the people who want to buy the stock. I think this section here is just the best. It really is going to get the blood boiling or excitement get to the highest level. That's why I say if this company ever became public, I have no doubt that the clueless stock market investors would send it to 100 billion just by this. So what they're doing here is that in the 111 cities which we have locations, we estimate that there are approximately 149 million potential members. And this would translate into a total opportunity of $3 trillion. Okay? Now, all they're doing is counting how many people have desk jobs, okay? And then saying that if we get them to come to our space, the total opportunities $3 trillion. That's just unbelievable crazy shit. It's like saying that there are 300 million people in the United States, and if 5% of them sign up for my Microcap Explosions newsletter, I'm going to make, $1 billion a year in subscription fees. Okay, if we step back and think about whether a company like WeWork is a good or a bad business, as I said in the previous videos that you have choices. Do you think it's a great business to sign a lease for 15 years, do a very expensive build out, and then let your clients pay you week by week or monthly or yearly when you are locked in for 15 years? I think you know the answer to this. And whether this is a good business or not, we can just look at IWG and how, because they're already profitable. And by the way, IWG is a profitable company, okay, that has more space than WeWork and is trading for $3 billion, while WeWork was valued at more than 10 times that amount, didn't make any money, had less space, and it was losing a lot of money. So that makes a lot of sense. But let's go back to some of the operating metrics for IWG. Return on assets, very low, 4%, 3%. Return on equity, don't look bad, but that's because of the leverage, financial leverage. Look at this leverage. That's why they're juicing up the return on equity. Gross margins, compared to some of the other companies that I talked about, are very, very weak. So this is a very average business. Net margins are very low. Here they were high, but usually they're very low. So this is not a fantastic business that will ever be fantastic. And so remember how I said the worst combination you can have is to have an average or bad business and overpay for it. Let's talk about, for example, competition. We already know that there's a lot of office space out there. And again, let's talk about pre-pandemic. There's a lot of office space out there. Do you think that WeWork would not have competition? What about all of these office owners that, let's say, they have empty spaces? You don't think that they can, turn their empty office space and then start marketing this to freelancers, startups, Or you don't think that they could lower the rents so much that it wouldn't make any sense for people to go to WeWork? Of course. Of course they can do that. What about other companies? Anybody can go and get a 15-year lease and start marketing it to freelancers and startups or small companies. There's no barriers to entry in a business like this. The bottom line is this, that this kind of business model, with the clients that come in to rent space like this, the reason why they're doing it is because they don't want fixed costs themselves. So essentially what they're doing is they are transferring the risk from themselves to companies like WeWork that sign those 15-year leases, and they themselves take on the risk of high fixed costs. And when bad times or recessions arrive, the clients can have the flexibility to quickly stop paying or get out of those, or wait for those short-term leases to expire, and leaving the company like WeWork holding the bag and taking all the risk and then the fixed costs. This, to me, this doesn't sound like a business that I would ever want to be involved in. It's just simply too risky. And signing long-term leases for 15 years, it's essentially the same as taking on a lot of debt on a very weak business. We all see a lot of smart or successful people on TV that are, talking their book about businesses like this. And the guy from SoftBank that pretty much financed WeWork at the beginning, you see, he had a success with making a lot of money on Alibaba. And he had the balls to say that WeWork is the next Alibaba. Now, if you just take those kinds of words at face value, you might actually believe this. But when you understand the business model of WeWork versus Alibaba, you realize that they're not even comparable. And I cannot even believe that a person like this would say such nonsense to mislead investors. But you see this kind of stuff over and over and over. So that's it for this video. I hope you learned something. In conclusion, WeWork is a company that never made it public, but I have no doubt that if it made public, people would go crazy about it. But because of certain investigations when it comes to the founder and people looking at the financials, the IPO never happened. But this doesn't change the fact that there were people that lost a lot of money, like SoftBank, by backing a company or a business model at valuations that didn't make any sense when you just look at this business independently and when you even compare it to competitor like Regis. So thanks a lot for watching.
実は結構生き延びて
Those large-size investees are surviving and actually doing steady. They have a better chance going through this valley of coronavirus. The exception is WeWork. We made a mistake in investing in WeWork, and I'd admitted that several times. I was foolish and made the wrong decision.